Assalamu alaikum everyone and welcome back. I am Abu Haroon and joining me is my co-host 𝗲𝗏𝗪. We are here with the another new podcast. Before we dive in, a quick reminder, join our ICS community and follow us on YouTube, Facebook and Instagram and of course Patreon for more Islamic finance content and updates. We don't want you to miss any of it.
Walaikum salam and hello everyone. I am 𝗲𝗏𝗪. Thanks for tuning in. So today's episode is all about planning for a halal retirement and beating inflation. We'll walk through everything from why Islamic retirement planning is so important to manage risk and avoiding common mistakes, all while keeping it Sharia compliant. We are taking our initial 5-minute chat and supersizing it into a full comprehensive 30-minute discussion. So get comfortable, grab your coffee, and let's go through the beneficial information, inshallah.
That's right. Both 𝗲𝗏𝗪 and I are investors. We have been investing for 3 years. I am a big NVIDIA fan, while 𝗲𝗏𝗪 here has 5 years under his belt and won't stop talking about Tesla. Oh man. We might joke about our favorite stock, but we are on the same page about helping you secure a comfortable halal retirement. We will keep the tone optimistic, but also cautious. But because investing for retirement is exciting, but it's something you have to do it wisely.
Exactly. We'll keep it conversational. And remember, if you hear something useful, make sure to subscribe and follow ICS on social media. We'll mention that again later, but thanks to our ICS community, we can share this guidance. Now let's get this started with the basics.
So first up, we should be discussing is why halal retirement planning is so important. Let's jump into that.
So, importance of halal retirement and planning. Retirement marks a major life transition. You are actually your regular paychecks stops, and you have to rely on what you have saved and invested over the years. For Muslim investors, it's crucial that this phase of life is navigated in a way that adheres to Islamic principles. That means all our financial planning and investing must be halal and free from things like interest, riba, excessive uncertainty, gharar, and gambling, 𝗍𝗪.
Absolutely. Think of retirement planning as shifting gears. During your working years, you might be focused on growing your wealth, like driving fast on a highway. But as you approach retirement, you need to slow down and drive carefully. In other words, the goals shift from aggressive growth to preserving capital and generating a steady halal income. You want your nest egg to last and support you, not to run out quickly.
Yes, and doing this the halal way isn't just about avoiding sin. It actually brings peace of mind. When you avoid interest, stick to ethical investments, and fulfill obligations like zakat, you are purifying your wealth. That invites blessings and barakah. Plus, Islamic finance principles encourage moderation and risk management, which are exactly what a retiree needs.
A lot of people ask us, can't I just invest like anyone else? What makes Islamic retirement planning different or better? Great question. The difference is that with Islamic planning, you avoid forbidden element like interest-bearing instruments and you focus on fairness and real assets. This often means avoiding excessive risk and speculation, which can actually protect you from big losses. And spiritually, you have the comfort of knowing that your money is earned and grown in a permissible way.
Well said, well said, well said. So ultimately, halal retirement planning is about ensuring you can maintain your lifestyle and cover expenses after you stop working, all in a manner pleasing to Allah subhanahu wa ta'ala. So with a solid plan, you won't have to worry as much about outliving your money or sacrificing your values. So now that we know why it's important, let's talk about where your money will actually come from when you retire.
Yeah, sure. Once you retire, your salary or business income takes a back seat. So what are the sources of income you will rely on in retirement? Once you retire, your salary or business income takes a back seat. So what are the sources of income you rely on in retirement? Typically, retirees have a few income sources like pensions. So if you worked a job with a pension plan or you're eligible with government retirement benefit, that becomes a primary source of income stream. So let's say, for example, in some cases here in Saudi Arabia, there are government pension scheme that if someone earned about 4,100 riyal a month and contributed to the pension program for nearly 30 years, they would roughly get 3,075 riyal per month in retirement. That's about 75% of their pre-retirement salary. This pension can cover a substantial part of living expenses, though it may be based on your work history. The point is the pension gives you a baseline income. The second option would be that you made some savings or do some halal investment. This is the money that you have saved and invested throughout your career, your retirement fund. How you manage and draw those savings will hugely impact your financial security in retirement. We have to ensure these investments are halal, of course, and we should withdraw from our savings in a careful way so that we don't run out of money too soon. We will talk about withdrawal strategies later. Another one is the passive income from assets. Many retirees have income from assets like rental properties or business. For instance, you own a rental property and you can rent it to provide a monthly income. You might have dividends from Sharia compliant stocks or sukuk payments. These investments can act like additional income streams. Not everyone have this, but it's worth mentioning. Investment can be an excellent source of retirement income. Although not all investment give you a regular payout, some like growth stocks might not pay dividends. So you would sell share occasionally for cash. Other like rental, real estate, or sukuk do provide a steady income. The fourth option, the last option, is to have like a part-time work. Interestingly, retirement doesn't mean that you do zero work. Many retirees choose to do some part-time work and consulting or usually it's consulting in their retirement years, the early retirement years. This could be just good so you can stay active, pursue a passion, or simply supplement one income. Of course, any work you do should be halal. That goes without mentioning. So even the modest part-time salary can help cover extra expenses and reduce the need or dip into your saving too much.
Wow, that's a great list. Actually, all the four options are amazing. But I want to emphasize something uh, about your. I think it was option number two on personal savings.
Yeah.
So some people get a lump sum from a provident fund or end of service benefit and might be tempted to splurge, like, I worked hard enough. Let me enjoy this money, enjoy retirement. Yes, enjoy your retirement, but be careful. The risk of spending down your capital too fast is that you might outlive your savings, leaving yourself in a tough spot later on. Retirement could last 20, 30, even 40 years, so your savings have to stretch.
Exactly. Think long term. One strategy is to treat your savings like a new salary. You pay yourself a certain amount each month or each year from your investment rather than blowing through the principal. That way you don't run out of money. When you say for example, when you are say like 75 or 80, in fact, the financial planner often suggests a safe withdrawal rate, something like 4% of your savings per year, so that your money can last decades. We will expand on this later.
Yeah, also remember your Islamic obligations. If you have substantial savings or investments, you likely owe zakat on them annually. Make sure to factor that in. Paying 2.5% on your zakatable assets each year is not only an obligation but also a way to purify your wealth. For example, if part of your investment earnings came from any impure sources, you should donate that portion to a charity as purification. This often comes up with
Yeah.
stocks. If, say, 5% of a company income is from non-halal activity,
Yes.
you would give 5% of your profit from that stock to charity for purifying it. So plan for zakat and purification so that your retirement income remains blessed and clean.
Exactly. That's a very important thing to you. People often forget that they think that they might not have to pay zakat, but that's very important. It's a very great point. In summary, let me just summarize that most retiree will fund their living expenses through a combination of pension, saving and investment, some of the passive income, and maybe do a little bit of work. The exact mix depend on your situation. Next, we will talk about how to plan and set goals, all of these moving parts, essentially building your retirement game plan.
Yeah, because so now that we know where retirement money can come from, let's discuss how to plan your finances in retirement. A robust financial plan is essential to manage your money effectively and Sharia compliantly in retirement. Think of your retirement financial plan as a roadmap for the next phase of life. It shouldn't be static. It's a dynamic document that you review and adjust as your situation and goals evolve.
Oh boy, the retirement document. So, what does a good retirement plan include? Let's break it down because a lot of people ask us how to even get started. So, first, assess your current assets and income sources. I would say that would be a good start. In other words, get a clear picture of what you have. How much is in savings? What are your investment? Any pension entitlement, rental income, etc. List everything and make sure all of these sources are halal or will be made halal. This steps is basically figuring out what am I working with here. The second thing is to estimate your living expense in retirement. This means
Yeah.
calculating that what you will need to spend per month, per year for a comfortable life. Include your regular daily expenses, food, utility, etc. Any new hobbies or activities that you plan to pursue, healthcare costs, and cushion for unexpected expenses. These are important. The important part is to do this within halal parameter. For example, if you plan to travel, you budget for it, but you won't consider any interest payment because you will avoid interest-based debt. Knowing you expected expenses will help you figure out how much income you will need to cover them. Third, set aside an emergency fund. We can't stress this enough. Even in retirement, unexpected things happen. A medical bill, a major home repair, who knows it? It's recommended to keep at least 6 months of living expenses in a liquid, safe account for emergencies. And by safe account, we mean something like halal bank saving accounts or something like that. So you have to avoid interest, you see here. That way, if something comes up, you don't have to sell your stocks or sukuk at a bad time. You have a
Yeah.
cushion.
Yes, that is very important. Exactly. Especially that emergency fund is your sleep well at night money. It's there so you're not forced to dip into long term investments during a market downturn. Remember, selling investments at an inopportune time can lock in losses or realize losses, so the emergency cash can prevent that.
Yeah, yeah.
So, this is a strategy point. You want your money to last throughout your lifetime, but you also need growth to combat inflation. So, your plan should find a balance between keeping money safe, preservation, and letting some money grow, like investment. And as always, growth must be through halal means. We can't just put it in an interest bearing account that's not allowed and also typically doesn't beat inflation. So we'll talk about halal investing in a bit, but note that in your plan how much you'll keep in cash versus invested.
Abu Larry, this is a very important point because I have seen many people who have taken their provident fund or their retirement fund and they put it in some interest bearing account so that they will eat up or they will use whatever is coming through the interest. This is actually purely haram. Continue, please.
Yes, I've seen those examples, and it has turned out very bad because those are not kind of aligned with inflation,
Hmm.
and you can end up having the capital not growing and the money is shrinking every month by month or year by year.
I think you will be talking, this should be your next point, discussing
Yes,
that.
yes, yes. So asset allocation means how you divide your portfolio among different asset types, stocks, sukuk, real estate, etc. A good plan will define what mix of assets is suitable for your retirement goals. For instance, you might decide, okay, I'll keep 40% in Islamic equity funds, 30% in sukuk, and 20% in real estate, and 10% in cash, or whatever fits your needs. The key is that each part is Sharia compliant and serves a purpose: growth versus income versus safety. We will discuss how to choose that mix soon. So, retirement isn't just one monolithic goal, it can involve multiple goals. Maybe you want to perform Hajj, maybe help a grandchild through college, Maybe buy a smaller house or travel, or leave a charitable legacy. Divide your goals into short term, intermediate, and long term and estimate how much each will cost. For example, an immediate goal could be taking a family vacation next year. That money should be kept very safe and liquid. And of course, not in any interest bearing instrument. An intermediate goal might be something like buying a new car or paying for a wedding in a few years. For that, you might invest but shift those funds to safer halal accounts as the time approaches. And then a long-term goal, the long-term goal could be leaving behind sadaqah jariyah, charity that keeps giving, or an inheritance. You could invest part of your portfolio in higher risk, high return halal assets for longer, knowing you won't need that money for many years. The important part is each goal aligns with Islamic values and has its own strategy.
Oh boy, that's a lot. But these are the building blocks of a retirement plan. To recap, you know what you have, you know what you need, keep an eye on emergency stash, balance your safety and growth, decide your halal investment mix, set clear goals. So you have to write it down. Revisit each year whenever major life events happen. A plan is a set it and forget it. Life can surprise you, so adjust the plan as needed.
Yeah, exactly. And don't be afraid to get help in making that plan. Later, we'll talk about seeking professional halal financial advice because sometimes an expert can really help put all those pieces together in the optimal way for you.
Speaking of balancing safety and growth, one big reason we invest during retirement is to beat something that never retires: inflation. Let's move on investing during retirement and why it's so crucial for beating inflation and more.
Actually, a lot of people ask if I am retired and not earning a salary, why should I bother investing? Why not just keep my money safe in a bank or under the mattress? But the answer is the answer in one word is inflation. Inflation is like a silent thief. It erodes the purchasing power of your money over time. If you just hold cash each year, that cash buys a little less in groceries, fuel,
Mm.
medicine, you name it.
Yeah. Let's break it down with an example because so important. So here I'm trying to define the inflation. Suppose the first year of your retirement, you figure out you need 80% of your final salary to live comfortably. A common estimate. Say you used to earn 55,000 real a year before retirement. So that's 80% of that is 44,000 real. That's about what you need in year one of your retirement. Sounds okay for year one, but assume the inflation, for example, 7%. We have seen higher inflation recently. In year two of your retirement, you buy the same goods and services, you need that 44,000 plus another 7%, which will become 47,080 real. By end of year three, it would be even more, and so on. So if your income doesn't grow, you will fall behind.
Yeah, and remember, a conventional bank account with a fixed balance won't keep up with inflation.
Yeah, I remember you
Same
were telling
example I
us
was.
before. Yeah, yeah.
Yeah, this is the same example I was giving.
Mm,
So, especially if it's non-interest bearing, which is the only type we would consider Islamically, even
yes.
though that pay interest often pay very low rates
Mm.
that might not match inflation. Bottom line, investing during retirement can help protect you from inflation. You want your money to grow in halal ways so that the real value of your assets don't shrink.
Now, investing does not involve risk. Yes. Sorry, I mean that the investing does involve risk. So some folk might think I avoid risk by just saving cash, but there is a risk in not investing too. The risk that inflation will eat away your saving. As one guide put it, if you leave all your money in the bank, it stays safe from the market ups and down, but it likely won't grow enough to offset inflation. So you are actually losing purchasing power safely. We need to balance approach. Invest enough to grow your asset, but not too much in high risk things so that you could lose your shirt. Always halal and always measured.
Yeah, that brings us to how much to invest in stocks or equities during retirement. There is a classic rule of thumb people talk about. called the 100 minus your age rule. It basically says take 100, subtract your age, and that's roughly the percentage of our portfolio that could be in stocks. The rest would be in lower risk assets like sukuk, real estate, cash, etc. For example, if you're 60 years old, so 100 minus 60 is equals to 40. So about 40% of your portfolio in stocks should be in stocks. If you're 70, then 30% should be in stocks, and so
So
on.
as your age is increasing, you're trying to be more safe. So this is just a general guideline, I think. It's not a hard rule. You must adjust based on your personal risk tolerance, your financial situation, your lifestyle. Some 60-year-old might be comfortable with only 20% in stock. Other might be 50%. But general wisdom is, as you get older, you dial down the risk. You shift from growth mode to preservation mode. In Islamic terms, this means moving away from from a heavy stock portfolio and more towards sukuk, the Islamic bonds, or something stable income generating asset. Whatever the stocks or funds you keep, it must be halal compliant. We can't stop repeating this thing. That is very important, as many people are not considering this. Sometimes they see a high percentage and they just don't think whether it's halal or haram. They just put it into this. So what I mean by halal compliant is by making sure those companies are permissible and their finances pass the Sharia screening criteria.
Exactly. Now, so moving on, let's talk about asset allocation and rebalancing from a Sharia perspective. Asset allocation, as you mentioned, is how you divide your money among different asset classes like halal stocks, sukuk, real estate, maybe Islamic mutual funds, etc. A well diversified portfolio is key to managing risk. Diversification is basically the concept of not putting all your eggs in one basket. From an Islamic view, diversification also helps because it reduces reliance on any one company or sector, which could potentially have an issue. As you
Yeah.
age, your allocation should generally get more conservative, meaning more in safer, stable investments and less in volatile ones.
Yeah. That's a very important point. Is regarding the sector rotation. Anyway, rebalancing is something retirees need to do periodically. Let's say you decided on 40% stock, 60% asset allocation at the age of 60. Now, suppose your stock investment performed very well one year. Great, alhamdulillah. But now they make up 50% of your portfolio because they grew in value. What means your risk level has crept up unintentionally. Rebalancing is when you realign your intended allocation. In this case, you might sell a bit of those stocks, take some profits, and reinvest that money into more conservative assets, getting back to the 40-60 percentage. This is like steering your car back to the center of the lane and the wind blows you off course. For a Muslim investor, when rebalancing, you would check that everything is still Sharia compliant. If any investment has drifted from compliance, say a company you start doing non-halal business or took out too much interest-based debt, you would replace it with halal investment. Rebalancing at least once a year is a good practice, or whenever things have moved significantly.
Now, a lot of listeners might be wondering what exactly should I invest in during retirement? What are the halal investment options out there for retirees? Let's go through some common ones and their pros and cons. This is where Abu Haroon and I like to geek out a bit. given given our
Yes.
love for stocks like Nvidia, Tesla, AVGO, you name it, there are so many. But don't worry, we'll keep it relevant for retirement needs.
We basically have few categories. Let's go. Sharia compliant stock, the equities. Yes. These are the share of individual companies that do halal business, no alcohol, pork, gambling, conventional banking, or even making weapons, things like that. They also must be meet Islamic financial criteria. For example, shouldn't have too much debt or too much interest income. According to AOFI, the company interest bearing should be below 30% of the market cap, and the income from any prohibited activities should be less than 5% of total income. If there is a small impure income, like less than 5%, we already mentioned that you have to purify it, donating
Mm.
that portion to charity. Now, here, just a moment, when we are saying you have to purify by donation, you don't consider this as sadaqah. This is not sadaqah. This is like you are getting rid of something bad, something nasty from your income. That's what you're doing. So the benefits of stock is that you can grow your capital and some give halal dividends, meaning your share profit, they share profits with you. The stock gives you an ownership in a real business. For instance, you believe in a company like NVIDIA or Tesla, like I do, and they pass Sharia screens. You can be a part owner and benefit if they succeed. Now, the challenges are that the stocks are volatile. The prices go up and down, sometimes wildly. For a retiree, a big drop can be scary if you need to cash out. So also panicking and monitoring stocks require effort. You must continually assure that you remain Sharia compliant and purify your impure earning. That's doable, but it's a work. So about it, just a bit more here is that you shouldn't be scared by looking at the news cycle because they are always scaring you out. So if you know it's a good company, you should stick to it.
Yeah, but
So the other option is the sukuk. You're saying something about it.
yeah, I was coming back to that because of the volatility,
Mhm.
the movement, people are not so much confident with equities.
Yeah.
So
That's why
that's what I was about
we
to
were also
refer.
suggesting to decrease the percentage of it.
Yes,
Yeah.
exactly.
So the next option is the sukuk, the Islamic bond. These often are recommended for retirees. Sukuk is an Islamic certificate that represents ownership in an asset or project. It gives return based on the asset performance, kind of like getting a rent or profit, not interest. Benefits of the sukuk is it provides you with a regular income, semi-annual payment, and generally lower risk than stock. They are backed by real assets, which add security. So they can be nice steady income piece in your portfolio. Similar how conventional folks use bonds, but sukuk are halal. The challenges are sukuk can become less liquid, meaning it might be harder for you to sell quickly at a good price compared to, say, big stocks. And the returns are not guaranteed. They depend on asset performance. They also usually lead less than stocks potential return, lower risk, lower reward. The third option is the Islamic mutual funds. Here, usually we are keeping most of our earnings into this, but let me just tell you what about it. There are the pooled investment fund managed by professionals that invest in a basket of halal asset, could be stocks, sukuk, real assets. They are screened by Sharia boards to ensure compliance. Think of it like buying a ready-made portfolio. Now, the big benefit of it is diversification and professional management. You don't have to pick individual stock or sukuk. The fund does it for you. Also, the fund manager can take care of purification. If the fund had small impure income, they usually calculate and donate it on your behalf, which is convenient. It's an easy way to invest broadly in halal markets. The only challenge with that is the fund charge management fees. So, and you are trusting on manager's skill. The performance depend on the market and manager decision. Also, while you are diversified inside a fund, you might want to diversify it across funds too. You have a couple of different funds or assets to avoid too much concentration in one type of fund. Now, there are the next option is having a
I
real
have
estate
to I have
investment.
I have to raise one point here,
Yeah. Go ahead. Go ahead.
Varun. So when you talk about like moving or keeping more than one fund, most of the v- good performing funds are similar, like their holdings are very similar. So that's something which you should be aware of, that when you're choosing different funds, make sure their holdings are also different.
Yes. Yes.
Yes, please carry on. Sorry to.
Okay. No, that's fine. That's fine. It's a very good thing. So about that, like say for example, as we were saying about some EDFs or mutual funds, there are some mutual funds that are like doing it in real estate. So this means you're buying a rental property or investing in Sharia compliant REIT, which is the real estate investment trust that owns properties like apartments, office, but ensures they use for halal purposes. The benefits: the real estate is a tangible asset. The real estate is a tangible asset and it can produce rental income and often appreciate over time. Also, a good hedge against inflation. Rents and property values tend to ride with inflation, so it protects your purchasing power. Many people like real estate because they understand it. People will always need homes, offices, etc. The challenge with that is the physical real estate is not liquid. You can't sell a house quickly without potentially losing some value or incurring some big cost. There are also management hassle. If your landlord dealing with tenants, maintenance, and all of that. So REITs are more liquid. Say again.
I was saying it's a headache.
Yeah, it is a headache. The REITs are, but on the other hand, REITs are more liquid and professionally managed, but the prices can still fluctuate with the market and economy. So the property value can decline if there is a crash, and it's not risk free. So last option is the doing 𝗵𝗶 and ijara contract. These are Islamic financing agreements, 𝗵𝗶, cost plus sales for leasing. They are not so much investment securities you buy like stocks or sukuk, but sometimes bank or institution offer 𝗵𝗶 based investment account or ijara funds. These tends to be used for short-term parking of money in a halal way. So the benefits of it is a halal return and often designed to be low risk, and 𝗵𝗶 is often like fixed profit trade because it's sale of a contract. They can be good tool too if you need income and have specific financing need, like you want to buy a car via 𝗵𝗶. So the issue with that is that it's not really a growth investment. It's more like financing tools, income tools, and specific needs. You won't typically use 𝗵𝗶 account to aggressively grow your wealth. They are more like preserving and getting modest return. And not everyone will have access to these type of investment options.
Wow, so such a comprehensive list.
Oh boy.
Halal real estate, murabaha and ijara contracts, Islamic mutual funds and ETF, sukuk and Sharia compliant stocks. Wow.
Yeah.
So most retirees will likely focus on the first four, which is stocks, sukuk funds, and real estate, in proportions that suit their risk appetite. For example, a moderately conservative halal portfolio for a retiree might be something like 30% Islamic equity funds, 30% sukuk, 20% real estate or REITs, 20% cash or murabaha deposits. That's just an illustration, that's just an example. The actual mix should be personalized.
And remember, even lower risk investment can carry some risk. There is so much thing as there's no such thing as a completely risk-free investment that also beats inflation. There's nothing like that. There is always risk in it. Do not think that there is assets that without risk. There's nothing like without risk. So we must always do our due diligence. If we are not sure how to pick our balance of that, that's where the professional advice can help. And we will get to that soon.
Before we continue, let's do a quick check-in with our listeners. If you have stayed with us this far, you're serious about your financial future, mashallah, alhamdulillah, just a reminder to join the ICS community. If you haven't, follow us on YouTube, Facebook, Instagram, and consider supporting us on Patreon. Your support helps us create more content and reach more people. Uh, and at this point, I would like to also announce that this is the end of our part one. We will continue this discussion, and a more comprehensive list will be shown to you in our next part. So stay tuned. And Abu Haroon, do you want to add anything?
Well, I would say, yeah, we will pick it from here. And in the next episode, we will be discussing how to manage your risk manage your risk and the common mistakes that people make, and how about seeking some professional help. That would be our next discussion points. So, so very nice of you of hearing us. This has been, we were intending it to be a little bit short, but it has gone very large. So it's not a 30-minute anymore. It's gone more than one. So just bear with us. It's an important financial decision for your future. So I would even say the young guys who are hearing this, you start following this advice and do it from now and plan for your retirement from now on. You want to close, Abu Larry?
Yeah, I think that's pretty much it. Thank you for tuning in, guys. And yeah, let's discuss this further in our part two.
Inshallah. Inshallah. Okay, viewers, thank you very much.
Thank
Assalamu
you very much,
alaikum.
guys. Wa alaikum assalam.